Welcome to the Living Your Greatness podcast. I am your host, Ben Mummy. The purpose of the podcast is to inspire millions of people across the world to achieve greatness and enhance their overall personal well-being. Living Your Greatness is becoming the go-to resource that CEOs, elite athletes, professional coaches, and entrepreneurs rely on to upgrade themselves. The podcast helps you master the best of what other people have already figured out. So I gladly invite you to sit back, relax, and enjoy tuning in to today's episode. Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mummy, and today we have a new guest to the show, and his name is Dr. Charle Nenner. So for those of you that don't know Charles, he is the founder and the CEO of Charle Nenner Research Center. And before opening his research firm in 2001, Charles joined Goldman Sachs in New York and London, where he served as head of market timing on Goldman's property trading desk. A random visit to Wall Street sparked Charles' interest to investigating cycles, which would apply to financial markets. He then developed an algorithm combining his cycle system with several other indicators. So Charles, welcome to the show. I'm really excited to hang out with you today.
Well, after this introduction, I'm interested myself to know what I'm going to say.
So Charles, I want to start off first. Can you tell us a little bit about yourself? Where did you spend your formative years growing up? What inspired you to bring the top research firm in North America? And how did you discover the power of cycles?
Well, as you maybe know or don't know, I'm a medical doctor, and I was participating in research that we wanted to know if people become more psychotic all over the world at the same time. Because as you might know, is that if it's full moon, a lot of women give birth, and doctors don't really understand why, but you better make sure that you got all the personnel available. So we wanted to know if there is let's say, a system behind this, the seasonal system. And then we found out, indeed, all over the world, people become more psychotic with certain intervals. So then I saw that, just give a number, every couple of years or every couple of decades, there's a lot of influx of psychotic patients. And then on a vacation, I was in New York and I was watching CNBC. And they talk if the market goes up and down, etc. It didn't make much sense. By the way, it sounds like a joke, but it's not a joke. Once I was on CNBC and says, "How did you come, to do this?" I says, "Well, I listened to you guys. It didn't make much sense, and now you invite me to be a guest on CNBC." But they took it as a joke. So, anyways, I thought maybe these cycles, you can apply them to all kinds of information. But like I said, first, the point is that you have to believe the world doesn't move at random. If everything happens at random, you never figure it out. So you have to take the side it doesn't move at random, and now let's see how it functions. So I developed this system first by hand because there were no computers, and in the 80s I started doing it in the computers, and I wrote a system that these days can tell you exactly if it's a stock, if it's a currency, if it's an index, which day the bottom is, how many days it goes up, how many weeks it goes up, and when the top is. And on top of that, we found a system to predict exactly what the price targets are. So we can tell you in 16 days, there's a low and it goes up for 3 weeks and it's going to reach this and this price target. So that's very interesting because then that's actually independent of the news that comes out. Now, most people have a problem with that because we're taught that, it can be things move at random, any news item can come in, but we don't deal with this. We don't even look at the news, sometimes a little bit at the news. Actually, we can predict the news. I give you an example. In the old days when OPEC was very strong, they could decide if the production goes up or the production goes down. And you would say they have free will to decide that. Well, the question is, do they? Because I knew what they're going to decide. And how did they know? Because I could predict what the oil price will be on Monday morning. So this is very interesting if you think about the problem, the philosophical problem is, did they have free choice or not? And anyway, if they have free choice or not free choice, we can predict it, and that's what we do.
Thanks a lot, Charles, sharing a little bit of your formative years. I find it fascinating, your curiosity, right? To go from a medical doctor to then, being interested in like the financial sector. And most importantly, discovering that cycle process as a tool, to help you become a great investor, not only for you, but even what you ended up sharing with others. Something that I find fascinating too is you've also seen where you've done it by hand and then where it's evolved, where you have other tools nowadays with technology, where it's even enhanced probably your thinking processes when you're making those decisions. Something that I want to ask you, how do you think this evolution now in the last, let's say 20 years, how has it changed in terms of like the tool sets for cycle analysts?
Well, actually, nothing has changed because I used the system that I developed in the mid 80s. I didn't change anything. I was afraid that when the year 2000 came, the new century, that it would fall back to the 1900s, but it didn't. Actually, everything stays the same. I didn't have to change anything.
I kind of thought you were going to say nothing has changed because it's a systematic approach, which has worked in the past and continues to keep working. So why would you
Right.
change something if something keeps working? Something that I want to switch to, Charles. I think it is important that my listeners have a better understanding of your expertise in cycle forecasting. So if you could give us a deeper explanation of what exactly is cycle forecasting and how can it help investors be more confident in their decision making?
We always used to say if you're something better, I don't think there's anything better than somebody who says, I know the day of the low and the high and the level of the low and the high. It's just something you have to follow. If they're interested, they can subscribe for free for 30 days to get our research, and then they can check it out themselves. We update 4 times a week. But to give you an example, why would it work? Let's say you own IBM from $100, and IBM goes to $150 in 2 years. And now IBM comes out with a great number. So what happens to the stock of IBM? Well, if the cycle is up, IBM has to go up, right? They had great results. And what does the Wall Street Journal write? Well, investors poured into IBM because they're doing very well. But now the cycle is down, but IBM still has good results. But now IBM is selling off, right? So what does the Wall Street Journal write? Investors took profit because they don't think IBM can do better next year. Which means is that even if you watch the facts, if you don't know the interpretation of the facts, you're still on the wrong side of the market. So that's actually behind the cycles. The cycles predict mass psychology and what the atmosphere is on every week and every month and every day. And it doesn't matter what the news is. It depends on the interpretation of the news.
I love that example that you brought up with IBM. And I think that perspective that you've shared of knowing like the lows and like the tops is super crucial information and important, right? To make you a better investor.
I personally, I wouldn't know how people invest. I have no idea how people make a decision to buy something or to sell something. I think they still listen to the media, which is a big problem for us because usually the media are the opposite of what we say. So when we say stopping, the media says it's going sky high, buy, buy, buy. And when it's bottoming, then the bears come out and it says, well, we think it's going lower. And now the research shows you have to buy, and it's very hard for people to look out their emotions and take the research and start buying. So we have been out of stocks since the beginning of 2021, and we're still out of stocks. And already I hear a lot of people all the time buying, 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 but especially the Nasdaq, that still goes down and down and down. And my problem with all these people is they never show how they do it. They say, I think, I feel, it could be, it depends on Biden, it depends on the Fed, it depends on all kinds of stuff, which they don't know. So actually you don't know anything. And I wish that the media would just challenge them. Okay, this is what you say. Can you show me how you got the results? That never happens. I mean, I'm sure you watch the financial media. You never see that.
I love that you mentioned that. And something that it made me think of is, an example that we saw last year was Bitcoin, right? We heard it everywhere on the news. You even heard, a cab driver say, hey, are you in Bitcoin? Are you going to get in? Right. And that's the worst thing that could happen to any investor is humans are very emotional. Usually like the time when you don't want to invest, when you're probably too late if you're hearing it everywhere and if you're seeing it marketed everywhere and if you're seeing companies that are getting created everywhere, right? So to really think more on how you are doing it rather than being so emotionally driven, which is humans by nature, what we are.
It's not really emotional driven. They don't have any clue. I mean, they don't know if the Bitcoin goes up and down. If you look at the track record over the years, we were up more than 200% last year on Bitcoin. We just follow the signals. And when it was 64,000, we had a downside target of 15,000, which we got. So you can do it's an exact mathematics. You can believe it, you cannot believe it. And I would just say, give it a try. You might be surprised.
So something I want to move to then, I know you have been recognized by Forbes as one of the legendary technical analysts. Your cycle forecasting is reliable and it's very unique, in terms of market forecasting. So why do you believe Forbes highly respects your work?
I don't follow everything that they say and write about me, but at least there's a system. It's not that I would say in 6 days there is a bottom in the Bitcoin and somebody says, no, it's in 16 days. That doesn't exist. So there's less competition. So then they always come back at me and it says, well, this is a system, I guess, until somebody else gets up and can compete with it. But you don't hear anything. Go anywhere in the financial business and tell them it's the next 10% on the Bitcoin up and down. I don't think anybody will tell you. That's how they put people asleep. Like nobody can know it. If you look at the media, the people come up and they ask, "What do you think the inflation is going to do?" Well, they have a whole story, but actually nobody knows. No, you don't know. Doesn't mean other people might not know, but they always get away with, "No, actually nobody can know." So they teach the public that nobody can know. And I think what Forbes meant is that we know, at least we explain how we do it. And like I said, there's not much competition.
I love that. It's strictly knowing that you have a system that works. So Charles, something that I want to move to is, what do cycles say right now about gold, silver, as well as the junior miners in both the short and the long-term picture?
Gold, the funny thing is, everybody's waiting for this gold already for years. And we only do short-term trades. We were long and we just took profit yesterday because the long-term cycles still have not bottomed. So you can hear all kinds of stories, inflation and wars. And then the question is, so why isn't gold going to the roof? But people will continue to say, well, there's inflation, there are wars, the whole situation is insecure, but it doesn't go up very much. And they continue to claim the same argument. So what's the argument? The argument is you could be right, but it depends when people realize that it's serious. And until they realize it's very serious, gold doesn't go up longer term. There's going to be a bull market. We're going at least to 2,500, maybe higher the next 2 years. The timing is important because a lot of people have lost a lot of money trying to play every bounce, and then it dropped back another $100, and they had to take big losses. So until the weekly cycles bottom, or even monthly cycles, we have quarterly cycles, the thing is not going up very much.
Appreciate you for sharing that information, because I know when I was preparing for this podcast, I was listening to another interview that you did. It was published about 3 weeks ago with Palestad Radio. And I know on that interview, you seem to have a strong conviction that precious metals are all set to accelerate this year coming. How should an investor position themselves to take advantage of this once in a lifetime opportunity?
Well, I would say take the 30 days free and look at the weekly cycles when they bottom, and then you know when to buy. We also tell you at what level to buy. Like I said, for now, we took a long position, which we're taking profit on, and we're just waiting for a long-term signal.
So Charles, I want to shift to a little bit of a different discussion here. For the benefit of my listeners, what are some of the most influential books that you have read over your life that you think hold great value for investors?
Well, I started with the, maybe you know Robert Prechter, the name. He is not doing very well with his analysis, but he did write a nice book. It's not too many pages. It's called Elliott Wave Explained. Anything that's Elliott Wave is worthwhile reading. It talks about Elliott wave counts and Fibonacci levels. The problem with that situation is that there are always different possibilities. So there's something you can look at the wave count, but the wave count could be 10 different wave counts, so you're never totally sure. In my system, we don't really work with the wave count. It just says we go from A to B, and B is the price target. Now, it might coincide with the wave count. It doesn't have to. Then there's another book that is called Option and Volatility Trading. It's written by Sheldon Nathanberg. I have never met anybody who could finish it. It's hard work. If people wanted to work for me and I didn't really want them, I said, why don't you go and read the book and then we'll talk about it. And never came back. To tell you honestly, I also didn't finish the book. But if you're interested in options, you should read that book. It tells you everything you have to know. And for the rest, there's actually nobody who really talks much about cycles and price targets. But it's worthwhile buying that book Elliott Wave explained.
I really appreciate you for giving those two recommendations, because I think that will also add value to this conversation for investors that are trying to thrive and do well, being financially fit and well. Charles, a question I have for you is, what are other mental models that investors can use to make smarter investment decisions?
I have to think about the question because I actually don't use anything else. I look just at, if I look at the market, I look where it gives a buy signal, when the cycle bottoms and when the cycle tops. And if you look at our notes at the website, it says Dr. Charles Nenner notes. It says, well, you go in when it gives a buy signal and you sell whenever there's a cycle top or the price target, whichever comes first. Being at Goldman Sachs, I taught myself the economics because I'm a medical doctor, so I did a lot of study, but I don't pretend to be a maven like all the other professors in fundamental analysis. And it doesn't do very much. Because let me give you an example. They can look it up on our website. About 3-4 weeks before this thing came out with the COVID, we sold all the stocks. Now, I didn't know what the reason would be. Could be anything. And used to be COVID. So now people who don't follow us, they says, well, it came down because of the COVID explosion. That was just a lucky strike. No, we knew something is going to trigger, but we don't know what. So you have this book that's called the Black Swan Theory. Maybe you heard about that. Well, Black Swan Theory is an event that nobody can predict. And what I try to teach people is we don't want to predict the event, what it's going to be. We just want to know when it's going to happen. But since people don't know when it's going to happen, they try to predict what's going to happen. And you cannot really know. It's a lucky strike. You really cannot know what's going to happen. So the mindset has to be totally different. You have to figure out when it's going to happen and not why. But all the media, since they don't know when it's going to happen, they always concentrate on why it's going to happen, and it usually happens far after the fact. So we started with this inflation going up, and we showed that for the next 30 years there's inflation. So it goes up, and then you have a little bit down, and you go up again, explodes. So everybody talks about why there is inflation. We don't deal with why there's inflation. We want to know if the inflation is up and how high the inflation is going. But since nobody can calculate that, they're going to tell you why there's inflation. Because of the COVID and more people are working and who knows what. That doesn't help you with investing. You think so. Everybody spends day and night listening to the media and the radio, and it's totally not necessary. You just have to know what's going to happen and not why it's going to happen.
I love that you have that mindset difference, which obviously has helped you and probably has led to a lot of your success, of asking yourself a different question of when rather than why, right? In terms of
because why we don't really know. Could be after the fact, we know, but not before the fact. So you could say, the market might go down if there's another explosion in the COVID situation. Is it going to be? Well, that I don't know. So he didn't say anything, right? But these things you hear.
So then how does an investor better their mindset shift to understanding when making their investments?
Well, it's very difficult because they have been trained also from a young age to understand why things happen. More important than that they happen. Why did they happen? Because that quiets us down. Even if you lose all your money, if you know why it happened, okay, suddenly there was a war in Ukraine, the market went down and I lost it. Okay, I can live with that. But if you would have looked at cycles, it's interesting. For instance, we saw that the wheat price would go through the roof. And so I predicted there would be a war in Ukraine because that's why the wheat price goes up, because they provide 50% of the wheat in the world. So cause and result are the other way around. So if you ask me another book, actually you have to go on quantum mechanics. And because quantum mechanics proves that cause and result are the other way around. First you have to result and then you have to cause. Now that's very hard to understand. But mathematically they prove that you have to result and then you have to cause. So if you apply that to the financial markets, you first have to result and then you have to cause. So that's a total different mindset. Again, the normal mindset that we're being taught from when we are very young. So it's not that easy to change your mindset.
It's definitely not always easy, but it's definitely doable as well, right? It's making those steps, taking those actions to actually wanting to understand, and by being open, right, to learn or follow people like you or read some of the books that you had mentioned, right? So it's definitely doable, but not as natural.
Talk about natural. I can give some background of these cycles. So as you probably know, and your listeners know, there's a sunspot intensity. There's a sunspot cycle. And the intensity creates an electromagnetic field here down in this world. And the electromagnetic field creates a crystallization of water. And your brain is like 80% water, which means is you think that everything is free will, but it has to do with the crystallization of the water in your brain. Which means is that if you know where the sunspot cycle is, then you can know what the psychological situation in the world is, also in the financial markets. So as an experiment, if people want to go and check this, if you go to NASA, they predict for the next couple of weeks usually what the sunspot intensity is, and you can overlay it with the Dow Jones and see it works very well. Or they can Google me, where I write articles and also presentations about the sunspot theory in investing. So the cycles have a natural basis. The base is the intensity of the sun.
That is good to know, Charles, in terms of where they could go to get more information on that. I appreciate that. Something that I want to shift to, Charles, what do you believe separates a good investor from a great investor?
A great investor, somebody who sticks with the system when he has a system. A good investor is somebody who has a lot of knowledge but doesn't really have a system. But he has, like they used to say, that if 55 of your trades are profitable, you're doing well. So that's a good investor. Now, if you look at my track record, I'm not selling my track record over, but can you see it on my website? You see that the NASDAQ is down 36% for the last year, and we were up 85%. I think we didn't have one losing trade. So we're not accepting the 55%. We don't want to have any losing trade.
Charles, a question that I want to ask you now that I ask all my guests on my show is the purpose of this podcast is to inspire millions of people to achieve greatness and enhance their overall personal well-being. So what is your definition of greatness?
Well-being is it sounds very basic, is being happy with what you have.
I think that definition is beautiful because I do believe that's why we want to be part of life and keep living is you want to be happy and you want to do things that you enjoy and you want to live with a purpose and all those aspects. So I appreciate that definition.
Yeah, but that doesn't always go together. Now you said something very interesting. Being happy and having a purpose is not the same thing. You can be very unhappy and still have a purpose. And if you don't have a purpose, I remember I have a boat in Amsterdam and we own it, the tens of us. So we go on Sundays. We used to go around. So, but people talk about is, did you do something nice this week? How was the weekend? No purpose. So, but yet people are very deep thinkers and they're not so happy because they don't strive for happiness. They strive for purpose. So this being happy is a bit overdone, according to me. If you have nothing else, well, try to be happy. But you're never going to be happy because like King Solomon says, nobody dies with more than 50% of his wishes granted.
Well, thanks for sharing that, Charles. And now that you've gotten a feel of my podcast and kind of what it is about, who is a future guest, someone that you personally know that you would like to see on the show?
Well, maybe my wife, but I don't think she wants to come on the show. She's laughing. I really wouldn't know because, like I said, I don't follow many of the competition, what we can call competition. So I guess you talk about finance, right, or not? If you wanna get somebody, if you can get him, Jordan Peterson. It's worthwhile listening to him always.
Well, then I will make sure to add Jordan Peterson to my list. And when that day comes that he's on the podcast, I will make sure, Charles, that you are one of the first listeners. Before I end off today's episode, where's the best place for all my listeners to connect with your work online?
If they go to charlesnenner.com, they can read about what we do. And you can click on free trial. It's for 30 days. What I suggest, because it's so much out of the box, just write down, the research is very short always, write down what we say and watch it by the end of the week if it happened. So if I say today the S&P goes up from this level to that level and it tops tomorrow at 1 o'clock or 2 o'clock, write it down and see if it happened or not. It sounds very, very strange, not the way you approach markets. And then you get a feel for it if it's correct or not. Like a friend of mine once mentioned on television, or the guy's crazy or not, because it didn't throw him out of Goldman Sachs for many years. So maybe it's something to say. So check it out yourself.
Okay, great. Awesome, Charles. So I will be sure to link all that information in the podcast notes. And I appreciate you too for, sharing about, how there's a 30-day trial. That way they know they're not committed right away. It gives them the opportunity to kind of see your work first before signing up to anything. Well, Charles, I just want to end off this episode by thanking you for being here today. Thank you for your expertise, your wisdom, as well as all of your insights and input.
You're welcome.
Thank you for listening to the Living Your Greatness podcast. If this show has added some value, don't be shy to subscribe, leave a rating, and make a review.